All right, good morning, folks. My name is Jason Bohr on behalf of our little top co for Christina and I, Belmont Group. Last time I was here with you folks, we presented a flight school opportunity. Really cool, really great response. I've appreciated all the support I got from the group on that call. Brief wrap up there. When we went back to the seller to close the gap on the 2023 financials, got cold feet. But you know what? That's okay. We know this happens in the world of deal making, and the luxury we have on our side is patience, right? I live directly next door. I'm probably going to see this guy out and about town. So we're going to go off and close a couple deals and then return to that. And on the couple deals coming through, right after I presented flight school, one of our proteges was kind enough to reach out and say, hey, you know what? I hear you like things that fly. I got this very cool opportunity. Maybe you want to check it out. And we have. So this opportunity is in the propeller manufacturing space. And they do a lot of very cool work in aviation, airboats, eVTOLs, wind tunnels, and UAVs. So at a glance, just to give you an idea of the size and the scope, I got some great feedback from Toby that this would be a great way to sort of orient us. Year over year, we're now at roughly 3.5 million, climbing consistently in terms of revenue. The adjusted EBITDA still climbing pretty consistently around about 1 million. With an enterprise value of 3.2, just to give you a bit of the size of the scope. 16 employees and a pretty healthy balance of those who can still engineer and design and do the layups as we look towards what a transition might look like. So you folks know me from the last call. I've got a bit of a background in aviation, done some cool work there. But when I looked at this opportunity, I decided I really needed someone with the technical chops to understand where we might, take and grow this this particular deal. And through this group, I was kind enough to receive an introduction to now my good buddy, Ben Dubois. He's got great chops. And if you guys haven't seen this guy on a seller call, he is something fierce. It's fantastic. So we struck up a call with the seller. Saw a lot of cool opportunity here with the kind of shop that is set up currently, and also more importantly, where we can expand it. The cool thing about this particular mix between myself and my partner, Ben, is it mimics the current setup from which the owner is looking to retire. It's currently he and his wife. They are looking to retire. He runs the technical engineering side, and his wife runs the operations. And that's sort of where we see this good partnership working. I would be able to handle the operations, which is going to speak to the growth opportunities we'll review. And then Ben has a really good idea of, how we could expand the product lines. So a bit of an overview on the opportunity here. The core business is the design and manufacturing of propeller product lines and other special projects based on a common design platform. Our customer base is experimental aviation, airboat owners, both commercial and recreational, wind machines, wind tunnels, aerospace, and R&D. When we come to the sales and marketing aspect, this is pretty traditional. We see this pretty frequently in our world. They go to trade shows, there's event sponsorship, but there's no consistent major marketing efforts at this point. They rely on word of mouth and a strong reputation that have resulted in steady sales. In fact, that's where this business was born, right? So the owner, he's an aficionado himself, couldn't get the parts he wanted by the time he needed them at the quality he expected. So he endeavored to build this shop, and he's done quite well for himself to this point. Some of the competitive advantages: he's got a proprietary product line. They design and manufacture all of their propellers in-house, and the in-house capabilities and business size make the company agile. We'll talk a bit more about that as a growth opportunity. When you're looking at sort of the product mix breakdown, you can divide it into three sort of swim lanes. You've got wind tunnels, which account for 30% and an average order size at $40,000. You've got aircraft with an average order size of roughly $10,000, and that's about 40% of what they do. And you've got airboats with a average order size of roughly $2,000, and that makes up the complementary 30%. And you can see a bit of the product breakdown at the top as well. You've got the airboat, you've got the ground adjustable, and then you've got the V350, wind tunnels, UAV, which is drones, and some of the engineering services. That's a bit about how they're billing what they do today. If you want to take a look at the larger market, the graph to the right is probably more prescient for this conversation. This is the domestic market through which the company serves. The market overview is good for context, right? So composites, through which we're delivering our product line today in aerospace make up 50% of the global aerospace market in 2018, and that market is predicted to reach 30 billion by 2025. So we see a nice consistent growth, nothing too crazy, but consistent is good. Aircraft engine and parts manufacturing, that industry is worth roughly 211 billion in the US and includes some of the household names that we know and love: Boeing, Lockheed Martin. Propeller manufacturing, that's contextual because that really speaks to the kind of niche that this business is serving, right? So you've got two major segments. You've got certified propellers, which are type rated for your Cessnas, your Pipers. It's heavily regulated by the FAA. And then you've got non-certified propellers. These are used in experimental aircraft or non-flight applications. They're not under FAA jurisdiction, which gives us a little bit more room to play in our sandbox, essentially. And this is really a cottage industry with only a few name brand manufacturers. And that's what we're seeing on the right? Received some feedback that this color story wasn't really popping. So we put this deal in hot pink. And you can see right to the left and right, there's a couple opportunities to think about expansion. And then for those of you familiar with the manufacturing industry, you'll notice a couple of the larger, more household names there within the same space that we're playing when it comes to specifically propeller manufacturing. So where are we going to take this? We had some great conversations with our seller to this point. Really cool work that we get to do here. But to this point, our seller's tired, right? They're working some long hours, he and his wife. He's looking at an exit. And with that, thinking about what he's done to this point and where he would take it if he would, if he had the resources, if he had the time, more importantly, and the energy to do that. And one of the interesting components is on the left, right? We talked about this a bit at the beginning of the slide deck. Yes, that plane is upside down. You are seeing correctly. And that's because we serve some of those folks who participate in acrobatic flight, right? So among them are some pretty key influencers in the space that use our product line. And we haven't really capitalized on that opportunity to this point. It gives us some good legroom for actual dedicated marketing efforts and some pretty cool content generation, if you ask me. An additional point is about the team leadership and expansion. And this is sort of where I've got a lot of experience to bring to the table, both in operations in aerospace and aviation manufacturing, and both in just, good old fashioned team leadership, which I've done throughout my life. Talking with our seller, he really feels that with proper structured team leadership, you could actually do some pretty exceptional stuff, including bringing on a second shift. That, along with a new product line or other growth opportunity to the right, may be enough to see a growth opportunity across the next 2 years of roughly 70% if we brought on a second shift before we make any significant CapEx investments in the business, right? Which is good for us to know. If that's all human capital we can bring in and expect to grow roughly around those ranges, it sort of validates what Ben and I were thinking would be a pretty robust growth strategy for this cottage shop down here with us in California. That notwithstanding, if we look at the growth year over year and we leverage in a growth rate of 6.5 from 2028, we see a nice consistent growth trajectory. Again, this is without any of the growth strategies that we're planning to implement once we move in. So if everything was held constant, we expect to see this grow year over year, grow nicely and consistently into a $5 million business. That 6.5 growth rate is factoring in the multitude of industries in which we play. So that would be airboats, aircraft, and wind tunnels. And that's sort of a nice blended and consistent average for what we're looking to get. So a good consistent growth pattern, even ahead of anything we want to bring to the table. And with that, I'll take us to the one sheet. All right. As we discussed a little bit about the business, propeller manufacturing is our niche, is a relatively cottage industry. We have 5 clearly defined product lines that we're currently catering to. Definitely some expansion to move out, even far out from the propeller manufacturing within the aircraft space. There's a lot of runway here to consider what we might do in automotive, another area where I've got a lot of experience. Locations in California. We've discussed some of the growth opportunities. One of the threats, of course, is these products can be reverse engineered by some of our competitors and sort of reproduced. We've got the asking price at 4.5, and there is a bit of a delta between that and the enterprise value that we've reviewed, coming in at roughly 3.2. We do feel that at
Jason,
this
can you
point,
blow that one sheet up a smidge?
yeah, great feedback. Appreciate that, Joshua. How's that working for you?
A little bit more, please.
Yeah, you got it.
Maybe go full screen on it. That might be part of the problem. Actually, it's starting to cut off. Yeah, so I think you need to go full screen on that one sheet and then zoom back out.
There you go. How's that working for you?
Just a hair more. We're still cutting off.
There we go.
Yeah, that's better.
Right
and you'll
on.
have to scroll up and down just a hair. It's cutting off the bottom a little bit, but you can see the sides good. There we go. Perfect. Thank you.
Yeah, right on. Appreciate you. Very cool. So as we saw a little bit of this in just reviewing the initial slide of the scope of the deal. Nice consistent growth. Definitely some room to bump up the adjusted EBITDA to reflect the kind of consistent growth we've seen in top line revenue across the bottom line as well. The MUD score at this time, so this is an interesting point. He is looking to retire, but he's also tired of running the business, right? Like there's actually some room here to keep him on and just let him draw and start to feed into some of those new product lines if we were to step in and you know, handle some of the day-to-day operations. I've got a partner who's very savvy in the kind of, you know, drawing that would be happening here, and a lot of room to bring some of these things to light. We do expect, as you know, the exit and the acquisition go on, that, you know, something we see is you start to get a little taste of what that retired life is look like. You'll eventually trend in that direction. And that's another good point to bring up. There's a lot of room to educate our seller here as to the different advantages of what we now know to be the primary means of exiting, which is the annuity deal. And so that's something we definitely want to bring to the table in terms of an offer structure, especially if you're looking to stay in the business to continue some of your drawing. We feel there's a lot of room to come in and say, hey, over the next year, we've got a lot of cool growth opportunities. We know where we've been and where we would take it. If you want to stay on and draw, we think this is a compelling way for you to sort of be part of an earnout and also help us transition the business. Upfront, the initial expectation, this is a broker deal, so they're thinking more 85% cash at close, and then a seller note to handle the rest. Certainly something we can present in an offer structure to say, hey, if you went with the SBA, this is what it would look at like. But if you're really looking towards some tax efficiencies and a little bit more of what you're hoping for in the asking price, the annuity deal is what we recommend. With that, happy to open up the floor to questions, and always appreciate the great feedback I get from this group.
Awesome. Nice presentation.
Thank you.
Anybody have any questions to start? I mean, I can give you my thoughts. I think it's a good deal. I love niche manufacturing spaces, personally, just because I feel like there's generally not a lot of competition that comes in, which is, in my view, other than execution risk, competition risk is always the second biggest risk to me. So I think the competition risk is relatively low. I think it's, you know, the margins look like that of a manufacturing business. I would say the margins are tight, but generally margins are pretty tight on most manufacturing businesses. And the price looks at a fair multiple. I mean, do you have plans to grow it? Like, you're going to buy it. What are you thinking about doing? You know, where are you going to take the business? Are you going to grow it? Are you going to roll it up? Are you going to, you know, try and sell it? What's your plan?
Yeah, it's sort of a dual strategy as well, right? So we've got 3 swim lanes that we really know we can grow the business within, right? So there's the marketing aspect, dedicated marketing, dedicated sales. There's team structure, so we can build the team, put in a second shift, and potentially grow the top line revenue by 70% before any CapEx expenditures. And then there's the idea of new product lines, for which Ben, myself, and the owner on the right earnout schedule are really prepared to deliver against. We also think that given the location, the more we move our seller to this, you know, nice, you know, ideal retired life, the more the network and the local community is going to see what was done here. He's really dialed into the local community. So we feel there's a good audience to continue growing and expanding the business ahead of an exit within probably like 5 years.
Hey,
Got
can
it.
you talk a little bit to the add back and take backs adjustment? Looks like you've got some take backs for 2022 that pull the EBITDA down, but there's a good number of add backs in both 2020 and 2021.
Yeah, that was essentially something that they were doing for their retirement play up against, and we had to take that back.
Hey Jason, this is Jeremy. Hey,
Hey, Jeremy.
I love this deal. So this is where I started my M&A career in the aerospace industry. So with a company called TransDigm, and we started acquiring companies like this, and we IPO'd. We were like $50 a share price probably 10, 12 years ago. They're now $800 a share price now. So there's a lot of opportunity in M&A. I think the one thing I would look at is really understanding how much of the business is proprietary, sole sourced products. Because if that's a majority of the business, a 4.5 multiple on this type of business is a steal. I think that's completely reasonable. I'd also want to understand the kind of the breakout between commercial and government. What those percentages look like between the two different sectors. But yeah, this is the exact type of business that we're actually looking for in Kings of Deals. So if you do need help getting us across the finish line or financing or something like this would fit in with exactly what we're looking to do in Kings of Deals in the manufacturing sector. So let me know if you need help or anything like that. Definitely interested in talking.
I love this deal, right? This is an absolutely amazing deal. It's just not worth 4.5 million. I'm probably around the $3.5 million mark. I think Jeremy's right. 4 to 4.5 times multiple of the average adjusted EBITDA, less the 390,000 or whatever it is of working capital deficit. The good news is if you did go down the SBA route, you can raise that as an additional loan. So I'm at around 3.6 million for this deal. What I would do actually is this is a classic 2-offer deal structure for me. I'd go in the low threes on an SBA and maybe something in the high fours, low fives on an annuity type deal structure. But looking at, and I missed the start of it, I was driving back from a meeting. The MUD score doesn't seem high enough for me to do an annuity deal. That's very, very average MUD scores. And whilst the lever score is super high, that might help you. But the problem, Jason, with a business like this is an absolutely great business. Everyone's going to want to buy this. So I'd be extremely surprised if he did an annuity deal. Loads of people are rolling up in this space. There's loads of trade buyers in the market for this space. I'd be very surprised if he didn't get something high threes, low fours on an SBA type deal, and the SBA would they'd lap this up. You could probably get this for a 5% equity payment. Like this is what the SBA would call like a best in class deal. It's growing, the margins are decent. It doesn't have a lot of working capital inside of it, but that's okay. You can race for that. Look at all the green. Look at all the ratios. It's got doesn't have a lot of customers, right? But at the end of the day, like if you look at the market, I think 10% average customer of revenue and only 13% for the top one. Yeah, I'm not overly worried about that. So I'm not overly worried about that. Just check your number of customers, 10. That seems low to me, because if 34%, you've got concentration, top 10 customers, 34%. So I'd be expecting, 50 to 100 customers. You might have missed a zero off that. But I love this deal, but I think you're gonna have to pay a decent valuation to get it. Where are they in the process, Jason?
As far as other offers on the table,
Yeah.
yeah, no other offers have been presented to this point. From what I can tell, in speaking with the broker and the seller, we're one of a few interested parties here,
Wow.
which is, to your point, surprising.
You know what that tells you, though? Do you know what that tells you?
Yeah.
It's a really shit broker, right? If they were a real broker, and instead of listing the business on the website and just sitting back waiting for it to kind of happen, if they looked at this business and basically came up with a buyers list and thought, well, okay, who are the family offices and PE funds doing roll-ups in this space? Let's go talk to those guys. Who are the corporates within 50 to 100 miles of this location that are, I would say, probably 10 to 15 million or higher revenue, maybe something less than 50, like literally should be out there hitting these guys up. You could create a buyer list for this business that's probably going to have at least 50 to 60 names on it. Like, you'd get 10 offers. Like, if I was the broker on this deal, I could get more than $4.5 million for it. I'm telling you right now. Mm-hmm. Great, fucking great business. Really good business. Good job.
Thank you.
Alrighty, so I'm a big green light on this, but sorry to hijack Kyle and Jeremy. I'll let you guys run the first deal. I want to run the second one with Rick Nolan because it's linked to something we were doing on the advanced track, and then unfortunately at 5 o'clock I have a seller call, and then I have another one at 5:30. So I'm going to miss the last one. But we'll have David Giroux go last because I've literally reviewed this deal yesterday, so I don't need to be on that. So I had a one-on-one with him on this. So all right, Kyle, Jeremy, I'll let you handle Q&A and everything for this, but I love it.
Perfect. Let's see who we have here. John, you got your hand up. What's up?
Yeah, I noticed the inventory looks low at $3,500 only.
Yeah. So,
so Jason, I think John's asking, the inventory only shows $3,500, which is, probably low for a manufacturing company. So, have you looked into that at all?
Yeah, I'm checking in on that number. I've got a call set with the seller later today as well.
They probably, so they make propellers, right?
Yep.
So they probably, because they're probably custom. It's probably a custom thing, right? And and Andrew Lamb has just typed in the chat exactly what I was going to say, but I'm going to give him credit. They've probably got just-in-time manufacturing, so they're making this stuff bespoke to all. But they're probably getting the stuff in and turning these things out quite quickly. I'm guessing this type of business has got quite a short manufacturing cycle, which is, this isn't the business where they'll make a bunch of these and they'll put them on a shelf in a warehouse and wait for the customer to kind of call them off. These are all going to be very, very bespoke.
Yeah.
And that's why your AR, that's why your AR is really small as well, because this is B2B, obviously. Individuals like us don't buy propellers unless you own a plane. So this is a B2B. And if you look at the accounts receivables, it's less than 60 grand on $3.6 million of revenues. So it's 5.7 days, right? So this is Defense Department contracts, airplane manufacturers, boat manufacturers. They ain't paying you in 6 days. They're paying you in 60 days or maybe longer, right? So this is all bespoke stuff, and I'd be very surprised if they didn't take at least some of the payment up front. Do you have prepayments on the balance sheet? One of the things I'd look for in the balance sheet, and Jeremy, I'll let you speak to this, is there might be a prepayment number. And what you want to make sure is they haven't spent that cash, because there's not a lot of cash in this business, and then you've got to fulfill all of those orders because they've already spent the money.
Yep.
Here's my Here's my big question for you as well, linked to this, right? Where's all the cash gone? They've generated $2.5 million almost in EBITDA over the past 3 years, and they've only got 300 grand in the bank. Where's all the money gone? Are they taking like massive distributions every year? Is that what they're doing?
It's a great question. I'll have to follow up on our call this afternoon.
Yeah. Okay. Sure. So, and then here's the other thing linked to this. You know, where you've made an adjustment here for the working capital. So what we have, the way this one sheet is designed, it's averaging across every industry, right? Because there isn't a one sheet for every sector. It's averaging across every industry that really in a deal, you want to have 2 months revenue in net working capital. So cash plus inventory plus AR less AP, right? Now, in some industries, you don't need that much. And then when you've got businesses like this where I know for a fact, because they have little to no inventory and they have little to no AR, these guys are basically making to order. They're probably getting cash flow up front to fund like the bill of materials. A business like this doesn't need 2 months of working capital. Keep that up your sleeve for your negotiation. But if you end up doing this deal and you know the 400 grand of deficit of working capital isn't factored in, I wouldn't worry about it. I don't think this is a business model that needs a lot of working capital. It's like looking at an e-com business, right? I mean, you only look at an e-com business or a business like Dealmaker. For those of you that are investors now or will be soon to be investors in this business, like we need pretty much zero working capital, right? Because when everybody buys the program or everybody buys an e-com product, they're paying for it like when they buy it. So with your merchant cash account through your bank, like Stripe or whatever, or PayPal, you're getting all of that money within 24 hours. And then you're paying for the product on terms. You're paying your employees twice a month. And then you've got other vendors and suppliers. So in a business like ours and in like an e-com business, you've always got a positive cash conversion cycle. In a B2B, where you've got AR and you've got AP and you've got all these different things, if you're not collecting the cash in from the customer faster than what you're paying out for everything else, you have a negative cash conversion cycle. And the more you grow a business like that, the more working capital you have to have in the tank to be able to go to that speed. Whereas if you've got a business with a positive cash conversion cycle, you don't need additional working capital necessarily to actually hit the afterburners and scale. So that's what I would be focusing on for sure. And Jeremy, I would love to partner on this deal for Cody. Oh my God. Good find.
Yeah, absolutely. I love this business.
You know what makes me so proud? Jeremy, do you know what makes me so proud about Protege?
What's that?
Finding these deals and we aren't. That is what makes me super proud. That Jason, and your last deal was awesome, by the way. You're finding incredibly good deals. This is what a really good deal should look like. And even though it's a broker deal, I got to tell you, I don't think the valuation's like crazy. It's not. 4.5 times multiple on $1 million of current year EBITDA in Aerospace. That's not bad.
And the reason I said 4.5 is steel, if this stuff is sole source, that means a lot of these parts you have to go through the FFA or FAA to get approved, and that process can take up to 3 years. So if it's a sole source product and nobody else is doing it, you've basically got a monopoly on the market with what you can do. Nobody else is going to come in and replace you, and if they do it, it costs a ton of money to do that. So that's the key to these types of businesses, and people will overpay for them because of that.
And it's proprietary, right? And look at what they do. It's composites, right? Within 10 years, composites will be 80-90% of this industry, right? Yeah. And this is a sole source company. What an incredible deal. Can I Can I upgrade my score from Greenlight 75? I'm going to upgrade it. This is an amazing business. So yeah, Jason, if you want to do this on your own or with other proteges, I will applaud you from the Zoom every week. But if this gets big boy-ish pants and you want a partner, man, we got capital. We can do this with you like in a heartbeat.
Amazing. I really appreciate that.
Deal. Good job. Any other questions, guys? Let's hit the chat. Who else has got a question on this stuff?
Maybe Toby's in this space. Toby, you want to give us your comments? What are your thoughts?
Toby. What a great deal, man. You'd buy this, wouldn't you?
I would. I was the 911 coach for this deal review, and I loved it from the beginning. I actually, when you started the presentation, I said, I could smell the fiberglass as you talk about this. So I've been to one of these facilities, and I think there's prime opportunity to buy those other two, to roll this up with those other two that are about the same size as him, and then to go after one of the bigger ones, and to own half that market. I do remember it was all non-defense. So they're not making anything for the military, and so they could expand in that direction. And also, with all of the talk about the jets and flying cars that we're going to have, they're all going to need propellers just like the ones these guys make.
Mm-hmm.
So all those startup businesses are going to consume a lot of product, whether they actually get to market or not.
Yep. Okay.
So I love it. Big green light.
Couple of questions I'll just hit real quick. Question from Dave Evans. Would you look to expand this into other countries? I absolutely think you could. Australia's nuts for carbon. UK. If you hit up some of the UK companies in this space, I think this is definitely a good thing. Dave, you mentioned Airbus in Europe. I've never seen a propeller on an A380. Might be wrong. I'm kidding you. But yeah, there's loads of European and British companies I think would be a great market for this. I'm guessing though, the way I would do that is I'd acquire a company in that location, or if you didn't want to do that, I'd license this out to them because obviously these things are going to be crazy expensive to ship. Where's this manufactured? Where's the site?
Yeah, we're down in Southern California.
Oh, right. Okay. Yeah. So you wouldn't fly these things from Southern California, and it's too expensive. Takes too long to kind of ship them. So
right.
I think you're fine moving them around the US, Canada, maybe into South America. But I think if you want to penetrate Australia and Europe, I would just have a facility over there. I'd call Garland and have him go and find one of these guys in Germany, because Germany is the best engineering country in Europe, in my opinion. So that would be really, really cool. And then there was a question on the numbers from let me go back through Rodney. Rodney's asking, should we be doing the trailing 12 months or just the last 3 full years? So that's a really good question. So obviously you want Y-2 and Y-1 numbers. Of course you do, right? If you've got full year 2020 numbers, which you should have this time of year, but then what you should always be looking at, Rodney, is either a trailing 12 months number or interim financials. So, we're towards the end of October now. So any business that you're looking at should have numbers through till the end of September. So that's 3 full quarters. And then what you can do is you can just gross those up, right? So you'll take 12/9 of those numbers. But then if you have monthly management information, if you've got monthly numbers for last year and you've got monthly numbers for this year, and you know roughly what the growth is across all the other different months, you can adjust the kind of forecast, on that basis, and you'll know what the margins are. So you can calculate with a fairly high level of accuracy what the EBITDA is going to be as well, right? Obviously, depreciation amortization doesn't really get baked into the books until, you know, the full year end, but you know, you'll be able to spot the trends. So that's how I would do that. And then I don't think we've got any other questions. But yeah, get your votes in, guys. Really good deal. Good luck. Reach out if you need more help, or reach out if you want a funding partner for this. But man, the SBA is gonna like be all over this, like a rat up a drain pipe, as we say in the UK. Be all over this deal. This is a phenomenal business. Hey guys, I'm Carl Allen. I'm the founder of Dealmaker Wealth Society. I've done tens of billions of dollars of deals over the last 30 plus years. If you're new to my channel, definitely hit like and subscribe so that you can get all of my amazing Dealmaker content in real time. You're not going to miss any of the outstanding information that I'm going to share with you. And if there's a question that you've got, if there's something that you want to know the answer for and you want me to speak to it, definitely hit me up in the comment section and I will record those videos for you and I will get them on this channel as soon as possible. So love having you part of this YouTube community and I can't wait to serve you. Until then, bye-bye for now.